Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I would like to share with you my 5 best recommended ways to use the MACD indicator or the MACD indicator, one of the most common, popular, powerful trading indicators out there. Again, in this video I would like to share 5 top ways to use this indicator. But before I do that, if you're into this channel, welcome to our amazing community. Please subscribe with the subscribe button below. And also I invite you to join us in our trading family, Traders Academy Club, to enjoy from all our real-time trading ideas, our real-time trading education, free, complete VIP price action trading course, supportive the trading community, and basically to enjoy from all we have to offer in our #1 ranked for many years now trading club. To join us, please follow the link below the video in the description or in the pinned comment in the comment section. So what are these 5 ways that I want to share with you how to use the MACD indicator? So the first one is the classical way, the way of the ride the trend. Classical way to ride the trend purely with the MACD. And to do so, what you need first of all to do is to define a trend. Now I'll go for a blank screen to explain that. What is a trend? It's a sequence of highs and lows in the same direction. Downtrend is defined when you have lower highs, lower lows. As you can see here, lower highs, lower lows. This is a downtrend. Uptrend would be exactly the opposite. When you have, imagine like stairs, right? Every time you climb the stairs, higher highs and of course higher lows in a sequence. Okay, by saying that, that's not an uptrend and not a downtrend. Okay, very important to understand. There has to be a sequence. This is the first thing you need to be able to identify. Now, as much as I love indicators, and as much as for me MACD is one of the best ever, still very important to understand, to remember, indicator's job is to indicate. That's it. Okay, the price has to dictate, and you have to be able to read clearly the direction of the highs and the lows, the way they are lined up. Okay, and this would identify how exactly you trade with a trend or in a corrective phase, etc., etc. By saying that, once again, I want to invite you to Traders Academy Club, where you get access to a complete price action trading course. If you want to take it to the next step, follow us there. So here is the first thing, MACD with the moving averages. So one of the way to do that is once you identify trending structures, like for example, lower highs, lower lows starts to build up here, right? High, low, high, low, high, low. What happens in this place also, MACD, moving averages of the MACD cross to the downside, go below the zero line. There is a zero line here, right? So the moving average go down, the histogram is already negative. As you can see, it's red. This is now synchronized with the trending structure the price is building. So this is the first sign that we are very likely in a bearish trend. And the way to take it from here is basically get the price making the pullback, and on the same or the lower time frame, find the next cross, the next place where the MACD starts to go down. So as you can see here, you can also use the histogram, because histogram is a classical sign where it really happens. So once the moving average cross upside, histogram goes positive. Once the moving average goes downside, histogram goes negative again. And this is your sign that again we go negative. Then this is where we rally, and again we cross negative, and then again we cross negative. This is one of the, again, it could be done on the same time frame or the lower time frame. Now, why do we still at all bearish here? Because if you take a look, even without measuring the direct highs and lows, look at the clear picture. Lower highs, lower lows, nothing flips. It is bearish trend by all the definition. And at the moment it starts, right? That's where the sequence of the highs and lows lined up. This is your chance to match that trend with the MACD. As soon as that happens, brilliant, you got your chance. So this is the first way to use the MACD. The second way is to combine MACD with any indicator that could give you overbought, oversold condition. That could be the RSI, the Relative Strength Index. And with the RSI, it's very important to mention the higher the parameters, the less sensitive it is. The lower the parameters, the more sensitive it is. And technically would give you early year alerts. Not always it's conservative, sometimes it's more aggressive, but it will allow you to find the conditions earlier. It could be stochastic, it could be CCI, momentum indicator, William R, you name it. Okay, bears and bulls indicator, anything else coming to your mind that could give you clear overbought and oversold conditions. So once again, once you identified your trend conditions, what you want to see is pullbacks, right? During the, as long as the trend continues, and we can clearly see that the highs and lows are still clearly lined up. So at the, once we got the pullbacks here, look at the RSI to go overbought, okay, above the 70. This is the classical conditions, or the stochastic indicator, or the CCI indicator. Once you are in a trend and the correction enters the overbought, oversold condition, this is your time to look for opportunities to continue and to ride with the trend. The second, by the way, if you have any questions, feel free to ask in the comment section, and I'll be more than happy to help you with that. And of course, if you want to learn all of the trading techniques, the way I use that, and mainly to understand in real time why I use that when I share my trading opportunities, follow us in Traders Academy Club, and that's where you will enjoy all the best of our trading techniques. And one little request in between the 5 ways to use the MACD. If you find this video helpful, and generally what I offer you here in this channel helpful, educational, please show your support back. It's very much important and very much appreciated by me and my team. Please hit the like button below the video, drop some feedback in the comment section, and feel free to share this video with anyone you think could benefit by watching that. And once again, thank you in advance for your help. It's very much appreciated. The next way is where it gets a bit more advanced, and that's where I love to apply my trading techniques that I teach in Traders Academy Club. So the first one is divergence. Divergence situation. Now I'll give you a little explanation here what it is. You can learn fully about my divergence trading in the Divergence University, a full divergence-based trading course. So the first thing is the divergence comes at the end of a trending conditions, where you would see higher highs on the price, but the indicator would start to show the opposite way, lower highs. Okay, this is a bearish divergence. A bullish divergence would be vice versa, when you got lower lows, which means on the chart, you can see that the sellers are still in control. However, the indicators indicate already higher lows. So the momentum of the sellers in that case would lose. And here is how it looks like. So a bullish divergence. Okay, take a look on the moving averages of the MACD. We are in clear trending conditions, right? Without any argument here. And we got a bullish divergence on the moving average of the MACD. This is our opportunity to understand, okay, a correction is likely to take place, and you can start looking for the pullbacks right at that area. On the previous opportunity we had on the chart, also on the moving averages, we got a moving average divergence here, okay, and a pullback taking place. As you can see, it starts a bit earlier, okay. More significant one comes right at that area, and of course much more significant pullback follows. So you can, again, you can pretty much see that everywhere, on every time frame you would go, on every pair you would go, you would see the same conditions over and over again. Moving average divergence, pullbacks, moving average divergence. Of course, it's not absolute, and there will be cases like here that there will be divergence and it would not happen. There is no 100% here, and I hope you don't fall on this illusion that something could really deliver 100%, because it does not exist in trading. But it does give you a fantastic indication that the trend is likely running into some sort of let's say exhaustion movement, and the buyers or the sellers are getting weak, and correction is likely to follow. The next one would be a convergence. So we followed a divergence situation. What I want to show next is convergence. How does that look like? So let's take a look here. By the way, you can see here it's automatically scanned by one of the indicators I created. This is a divergence convergence indicator I created. If you also want to be able to use the same way, the same indicator, no problem. You can go to my blog, vladimirrybakov.com, or below the video in the description or in the pinned comment to find a direct link to get the FBCI, it's Fallsburg Convergence Indicator, and enjoy it exactly as I do. So what is the idea of convergence? So let's go blank screen once again. As we spoke before, right? This is where we run into a divergence first of all, right? Higher highs on the chart, but lower highs on the indicator. And this is where convergence happens, when the price switches, right? Flips the trading structure and making lower lows, and the indicator follows to make lower lows as well. Usually from here we get some sort of a pullback. Sometimes it's small, sometimes it's a bit bigger, and then we can expect further trend continuation. That's one of my top strategies that I teach. Of course, it takes a bit deeper to understand the exact and the exact steps and the accuracy behind the strategy. And again, if you want to learn all the techniques I use, both for analysis, management, and the trading strategies I apply, I invite you to join us in a Traders Academy Club. Enjoy all our real-time trading ideas and education. So here is the situation we got. So divergence, right? We got an uptrend, lower highs on the indicator, while we have higher highs on the chart. Also on the last part here, as you can see, indicator finds for us. Okay, and then from the higher highs we flip to make lower lows. This is again a very strong indication. Lower lows on the chart, lower lows on the indicator take place for us here. say no more. After pullbacks in usual market conditions, we can expect to see further continuation. Of course, again, it's not 100%, and to increase dramatically your accuracy with any technique, you need to understand, first of all, that any indicator, any indication has to come with clear price structure. Okay, very, very important. Indicator without price action is nothing but indication. And the final way I want to show you how to use, and the way to use is a hidden divergence. And this is the last one, also with the MACD, but a histogram. So we go with trending conditions. Okay, what are trending conditions? As you already know, as I presented here, it's when highs and lows are followed in the same sequence. What you follow next is a correction, and from the starting point to the ending point of the movement, you are looking for higher lows on the chart and lower lows on the histogram. Once that happens, this is where a hidden divergence indication comes in play. By the way, if you want to take a deeper look on the hidden divergence, in my blog, vladimirrybakov.com, you can find a direct download, completely free ebook talking about the subject. Or again, in the pinned comment section, in the pinned comment, or in the description, you would find the download link to this ebook. Feel free to download it and to enjoy it. So with the hidden divergence being created, this is the opportunity for us. As you can see, higher lows on the chart, lower lows on the MACD, and we tick upside. This is a trending condition to go and to continue with the ongoing trend or with the developing trend. So these are the 5 ways. Of course, there are many more ways to use the MACD, but these are the 5 ways that I consider to be the most accurate. And again, the most important thing to remember, indicator's job is to indicate. You need to be able to understand the price structures, okay, to understand what are the levels, what are important levels, how to find them, how to read properly the who controls the market at the moment, the buyers, the sellers, and what to anticipate. If you are able to do that with the indicators, you can get absolutely wonderful trading opportunities. So thank you for your time watching this video. I hope you find it useful, helpful, educational. If so, please hit the like button. If you still didn't, drop some feedback in the comment section. And once again, I want to take the opportunity and to invite you to join us in our trading family, Traders Academy Club, and to get your access to completely free, full VIP price action course. Enjoy the best of our real-time trading ideas and real-time education. Enjoy our really supportive, like-minded trading community, and I hope to see you with us. To join, follow the link below in the description or the pinned comment, and that's it. Thanks for your time once again. Stay safe, all the best, mainly health and peace. See you soon, and bye for now.